Hi, welcome back to BitWise. Have you heard of DCA, dollar cost averaging in crypto? Why this strategy is the smarter way to invest. Bitcoin has gained increasing importance as an asset class over the past many years. Bitcoin's price often makes headlines, primarily due to its volatile nature. No one can predict where the Bitcoin price will be a few months or years down the line, as is the case with any other asset like property or stocks. We will explore more about this. Nasi lemak or roti canai, te tarik or te o ash limau, dollar cost averaging or lump sum investing. These are some of life's perennial questions. How do you decide between dollar cost averaging and lump sum investing? We break it down for you with 4 myths and facts about dollar costing averaging or ringgit cost averaging. But first, let's understand what it is. Dollar cost averaging, also known as DCA, is an investment strategy in which you buy fixed amounts of investments at a fixed time interval, no matter what the market condition is. This means you automatically buy more units when prices are low and fewer units when prices are high. Of course, each investing style has its pros and cons. Here we bust some myths about DCA that can help you decide which strategy suits you better. First, many think that DCA is expensive and costly because you are repeatedly dipping your fingers into the market and incurring repeated platform and trading fees. This may be true if these fees are fixed costs. Let's say RM10 for every trade made, and this adds up, especially if you just investing RM100 each time. But if the cost is a percentage of the quantum invested, the cost is the same as lump sum investing. Therefore, always compare across platforms to get the best ideal in terms of fees. Second, for many who are new to investing, they will always follow the slogan, buying low, selling high. Most rookie investors interpret it as timing the market, where you speculate which is the best time and best price to buy or sell. You dump in a lump sum and hope for the best return. However, it is very hard to time the market. In the end, people may blindly follow to buy when everyone is buying and selling when the market is bad. DCA is a disciplined approach that helps you invest in the market incrementally. This is called time in the market and it reduces the risks of extreme outcomes, negative or positive. It also helps you stick to the plan and worry less about your investment. So there is definitely a strong case for time in the market over timing the market, and now you can sleep better at night. Third, is the mistaken belief of meager returns from DCA. While the potential upside of lump sum investing is definitely higher than DCA, the opposite is true as well, the potential downside could be extreme. Historically, the crypto market has seen more ups than downs even through the winter or bear markets. Therefore, if you have a long horizon and want steady progress, DCA is the best way to help you make money. I also will leave a detailed article by Luno at below description if you prefer to reading some examples. Lastly, thinking that DCA always has a lower potential for returns. 2020 was one of the most volatile years on record for the crypto market. However, if you had invested in Bitcoin at the start of the year, you would have seen your portfolio jump 13 times. That alone has made some investors believe that lump sum investing is better than DCA. While it is true that DCA may generate lower returns, these numbers make sense only with hindsight. Studies show that many people don't even want to get invested, to begin with. So the argument is, that many people don't even invest anyway. It is more costly to just hold on to cash due to inflation instead of investing because you miss out on the potential returns from being in the market. In summary, DCA is a good and gradual way to enter slowly and safely. The dollar cost averaging versus lump sum investing debate will continue to rage on, but hopefully, this leaves you with a clearer idea of DCA, making it a little more real and a little less mythical. Next, we will share more about the benefits and when or in what condition DCA is more effective than lump sum investing with some historical data. If you are Luno user and want to start DCA, Luno has a DCA function called Repeat Buy where you can set monthly, weekly, or even daily. DCA can be an effective way to own crypto without the notoriously difficult work of timing the market or the risk of unwittingly using all of your funds to invest a lump sum at a peak. The key is choosing an amount that's affordable and investing regularly, no matter the price of an asset. This has the potential to average out the cost of purchases over time and reduce the overall impact of a sudden drop in prices on any given purchase. And if prices do fall, DCA investors can continue to buy, as scheduled, with the potential to earn returns as prices recover. When is DCA more effective? DCA can help an investor safely enter a market, start benefiting from long-term price appreciation, and average out the risk of downward price movements in the short term. And in situations like the ones below, it may offer more predictable returns than investing a lot of cash at once, buying an asset that may increase in value over time. If an investor thinks prices are about to go down, but are likely to recover in the long term, they can use DCA to invest cash over the period of time they think a downward movement will happen. If they're right, they'll benefit from picking up assets at a lower price. But even if they're wrong, they'll have investments in the market as the price increases. Hedging bets through volatility. DCA exposes investors to prices across time. When a market experiences price volatility, the goal of this strategy is to average out any dramatic increases or decreases in their portfolio and to benefit a little bit from price movement in every direction. Avoiding FOMO and emotional trading. DCA is a rule-based approach to investing. Often, beginner traders fall into the trap of emotional trading, where buying and selling decisions are dictated by psychological factors like fear or excitement. These can lead investors to manage their portfolios ineffectively, like panic selling during a downturn or overbetting due to fear of missing out on exponential growth. Dollar cost averaging is all about hedging your bets. It restricts your potential upside in an effort to mitigate possible losses. Serving as a potentially safer choice for investors, it works to reduce your chances of taking serious hits to your portfolio caused by short-term price volatility. To know if DCA is the right strategy for you, it's important to think about your unique investment circumstances. It is always best to consult a financial professional before undertaking a new investment strategy. Key things to keep in mind. Dollar cost averaging is a strategy that is better suited for investors with lower risk tolerance and a long-term investment horizon. Makes the most sense when used over a long period of time with volatile investments such as Bitcoin. The whole idea is to take emotion out of the picture and have a long-term view. Bitcoin is the perfect asset to try dollar cost averaging. Prices are somewhat more volatile than other assets and most investors bank on the long-term prospects of Bitcoin. No investment strategy is foolproof and guaranteed. It is important that one be open to ideas and test out various possibilities. All the best averaging your Bitcoin investment. Wait a minute, we have a bonus for you next. If you are also interested in investing in cryptocurrencies and owning a piece of the future of money, I have good news for you. All you need to do is download the Luno app. Luno is the first cryptocurrency exchange to get licensed and regulated in Malaysia by the Securities Commission, so you're safe to use it. Once you have downloaded it, go to the rewards section and type this unique reward code, NUB8XT. Once you do that, you can deposit and buy cryptocurrency. Limited time Luno promotion: purchase a minimum of 100 ringgit of any cryptocurrency, and you will receive a 25 ringgit reward of Bitcoin. You can also enjoy a lower launching fee for new uni and link. I will leave a link also in the below description. Once again, a quick disclaimer that nothing in this video shall constitute financial advice. You are responsible for your own financial choices.